Hi folks, I'm here to tell you how to choose a health insurance plan that actually works for you. Now, this is based on real customer experiences, deep product research, and conversations with insurance experts who spent years understanding what really matters and what doesn't. So if you're someone who has put off buying insurance or feels lost comparing policies, then this is the one video that you should not skip. So take note and let's begin. Hi folks, I'm Shashank, and if you've always wanted to discuss health or term insurance options but don't want any of that spam or forceful selling, then just book a free call with our advisors in under 2 minutes. The link is in the description. Alright, when you think about choosing a health insurance plan, the first thing that you need to consider is what the plan actually covers at the base level. Now this includes 3 things: no copay, no disease-wise sublimits, and no room rent restrictions. A plan without co-payment means you won't have to bear a fixed percentage of the bill out of pocket. No disease-wise sublimits ensures that your insurer doesn't place an arbitrary cap on how much can be claimed for, say, a heart surgery or cancer treatment. And finally, room rent restrictions. Now that's a major one. A room rent cap not only limits your hospital room selection but also scales down how much the insurer will cover across the board, including doctor's fees and ICU costs. That one clause alone can significantly increase your out-of-pocket burden. Next is to evaluate the kinds of treatment that the policy supports. See, the plan should cover all major daycare procedures and modern treatments like dialysis, cataract, chemotherapy, and even robotic or laser surgeries that don't always require 24 hours of hospitalization, and these are extremely common today. And not having them covered can be a costly oversight. It's also worth checking if the plan includes AYUSH treatments, that is Ayurveda, Yoga, Unani, Siddha, and Homeopathy, which are particularly important for those who prefer traditional healing methods. Coverage for home healthcare or domiciliary treatments is equally critical in situations where hospital beds are unavailable or if the patient is medically unfit to be moved. Alright, moving on, let's talk about pre and post hospitalization benefits. Now, a solid policy will cover at least 60 days before and 180 days after hospitalization, because let's be honest, treatment doesn't begin the moment you're admitted or end the day you're discharged. Investigations, medications, follow-ups, physiotherapy, now they all count. Then comes something that many people overlook: consumables. We've made a whole video on it, I'll link it down below, please check it out. Things like gloves, syringe, IVs, masks, PP kits, so they may seem small but they amount to 10 to 15% of the hospital bill. So always check if your policy covers these either as an inbuilt feature or through an add-on. Now another feature to look for is cumulative bonus. This means your sum insured increases every year you don't make a claim. Now ideally you want a plan that gives you bonus coverage whether or not you raise a claim. Now equally useful is restoration, where the insurer restores 100% of your sum insured once you're partially used it. And the best plans out there, well, they don't limit how often this can happen. Unlimited restoration ensures that even if you have multiple hospitalizations in the same year, your cover doesn't run out. Also, let's not forget about riders, and we've made an in-depth video on riders as well. I'll link it in the description. Now, these are optional add-ons that allow you to personalize your coverage. For example, if you have a PED, that is pre-existing disease, a rider to reduce the waiting period can help you access cover sooner. Are you planning to have a baby in the next few years? Then maybe consider maternity cover. And if you visit doctors too frequently or expect diagnostics outside hospital settings, an OPD rider could be worth adding. So these aren't just extras, they can actually dramatically improve the relevance of your health plan. Now comes the $1,000,000 question. How much coverage is enough? See, a good starting point is 15 lakhs for an individual, but this isn't a one-size-fits-all. For family floaters, you may need a higher cover, say 20 to 25 lakh rupees or more, because all members draw from the same sum insured. But if you live, say, in a metro city, you're looking at high treatment costs. But if you have older members on the policy or family history of chronic illness, go even higher. And please think about inflation, because what feels adequate today may fall short 10 years from now. But even the most feature-rich policy can disappoint if the insurer's performance is poor, and that is where you must look at service track records. Start with CSR, or claim settlement ratio. Anything about 90% is considered dependable, but don't just rely on 1 year's data. Check the 3-year average to know how consistent the insurer has been. Then look at something called as ICR, or incurred claims ratio. Now this should ideally fall between 50 to 80%. If it's too low, the insurer may be rejecting claims. Too high, it could signal unsustainable pricing. And also consider complaint volumes. Fewer complaints, the better. A strong hospital network is also important, especially one with cashless types in your city. Now that is another must. It won't help if there are 10,000 hospitals in India, but your preferred hospital isn't included. Now finally, look at the insurer's overall business size and stability. An insurer doing consistent business is likely to offer offer better long-term support. Now, next thing is to think about what is called as the personal health history. Now, if you or a family member has pre-existing disease, some compromise may be needed. You may not qualify for the top tier plans, or you may have to accept a waiting period, higher premium or loading charge, or some form of sublimit in such cases. Please just don't blindly pick what's available out there. Instead, assess whether the trade-offs still give you decent value. Some plans offer disease-specific waiting period reduction or special bonus features like 2x cover from day one. Now, these are worth exploring. Now, a quick side note on premium sustainability. Look, health premiums increase with age and sometimes with insurer revisions. Look in for a 2 or 3 year policy that can help you control short-term pricing. It's also worth planning a separate savings fund or FD to keep up with future premiums, especially for long-term plans. And always disclose any changes in health and personal information, because not declaring a new diagnosis or even change in address can cause claim rejections later. So folks, to wrap it up, remember the cheapest plan is rarely the right plan. Don't fall for low premiums that compromise core features. Don't rely only on your employer's policy. It's often limited and disappears the moment you change jobs. And don't wait too long, because as you age, your options shrink and the cost rises. And if you're still confused, we get it. Book a free call with Ditto's advisors. We've helped over 8 lakh Indians find the right plan based on their life stage, medical profiles and budget, and we'll do the same for you. Without any spam, no sales push, just honest and one-on-one guidance from people who actually understand insurance. And I'll see you in the next one. Until then, happy insurance hunting.